Hello. Welcome to my channel, my dear friends. My name is Abhilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. And if you also trade on other pairs like Euro, USD, GBP, USD, then do check out the Forex analysis playlist on my YouTube channel. So let's get started. So this is the 4-hour chart of gold USD in front of us. And right now gold is trading at 1944. And as we all know that gold saw a huge sell-off from the level of 1998 to 1999. There was a huge sell-off on the chart of gold and right now standing at 1944. Yesterday we expected that during the correction on gold, market would take support around 1960 to 1950. We were hoping that market would take support and our analysis failed miserably. Okay, our analysis was wrong on the chart of gold because there was a report from IMF that the economic growth will be slow this year. If you want to read the article, then I'll be pasting down the link in the description box. Please go through the article. You will get the idea why there was a sell-off on the chart of gold and oil yesterday. My dear friends, keep in mind that best of the best trade setup may fail in the market. Any good level may fail in the market. Okay, any good analysis may fail in the market. But risk management is always important. If any trade fail in the market, instead of blaming me, focus on your risk management. After all, never forget, a trader can only expect to make a profit. Whenever you are taking any order, whether you are buying or selling, you can only expect to make money in the market. This is not under your control. The only thing a trader can control is his loss. So therefore, protect your hard-earned money. Stop trading blindly, respect your capital, and please protect your hard-earned money and follow proper risk management. So let's look at the chart of gold right now. 1944. Surprisingly, it broke all the levels and now standing at 1944. 1944 is an important level because this is the Fibonacci 50% retracement level on the chart. Let me show you. This is the Fibonacci 50% retracement level. See, this is the Fibonacci 50% retracement level on the chart. Right now, market is standing here. See, under usual situation, under normal circumstances, we usually see market respecting Fibonacci and bouncing from the level. Okay. But as we all know that there is a huge sell-off in the market, sellers are dominating the market right now. So as a result, taking a buy position is very risky, especially if your balance is below $500. Okay, if your balance is below $500, please do not take any position today. After all, you must be careful about your capital as well. See, market is not going anywhere, but if you lose a part of your capital, then it will be a big loss to your overall balance. Okay, so please do not make any mistake because right now we do not have any clarity about the direction of the market. Okay, so if market breaks the level, of 1944 and starts going down, then yes, you can take a sell position as well, but keep in mind that will be very risky. It will be a high risk sell position. If you want to take a sell position, that's your personal risk, but keep in mind, if your balance is less, if you do not have good amount of capital, then please avoid trading on gold right now. Okay. And in case market starts recovering, okay, in case market goes up, then yes, one level can be 1955 to 1966. 1955 to 1956 can be one level where market may face selling pressure again. Okay, if you see that market is reversing from 1955 1966, or if you see any shooting star kind of a pattern here or good price rejection, then you can take a sell position again. But again, I'm saying just keep in mind that these two levels, 1944 as well as 1955, both are very high risk. Okay, high risk. So if possible, do not trade on gold, at least for today. Market is not going anywhere, but your capital is limited. That is the most important thing in the market. Again, then we have another support around 1928 level. Okay, 1928 level. There is a possibility. Okay, I won't say that there is no possibility. Yes, there is a possibility that 1928 may act as support in the market. Okay, if you want to take a buy position, then this can be one level. Okay, if you see market taking support around 1928, market bouncing from 1928, or if you see price rejection from below at 1928, you can take a buy position. But please do not risk more than 2% of your capital, because right now market is very volatile, and you must know, you must understand when to trade and when not to trade as well. And lastly, we have a strong support around 1914 level. 1940 level. There is a possibility that around 1914 market will take support. Okay, if market takes support around 1914, 1914 to 1915, and market bounces, you can go for a buy. Okay, but again I'm saying that always wait for confirmation. As I always say, that confirmation is the insurance of traders. Why I say that? Because no level is permanent in the market. Once you get the confirmation in the form of price rejection, then only you should execute the order, because that is the confirmation that yes, buyers are present at the support or sellers are present at the resistance. Okay, so as a result, do not trade blindly. New traders, beginners, avoid trading for the day. This is not the ideal market to trade. Market is extremely volatile, especially traders who have less capital like $100, $50, $200. This market is not for you at all. Okay, just observe the market and see. And I'm pasting down a link in the description. If you want, then please go through it.